Are you looking at buying a home and know as much as this is going to be an exciting time in your life, this can be a very frustrating process all at the same time? Well, my name is Travis Wilson with PureMG, and I'm here to help share a few tips that may make your next home buying process much simpler. The absolute biggest thing you can do when you're looking at trying to make this home purchase as easy as possible is making sure you vet the professionals you choose to work with. You'll probably be referred a realtor and a lender from your family and friends, which is absolutely fantastic, but make sure you're going online, seeing what type of reviews they get from other customers as well, and what their experiences were like. We'll all battle back and forth on purchases that we make on Amazon and reading through all the reviews to make sure we're going to get what we expect. And the same should hold true when you're looking at making the biggest purchase of your life. So make sure you're vetting that realtor and that lender specifically, and so you can see exactly what you're going to expect to get, and in that way that'll make the whole process much smoother for you. Number two, all right, understand the differences in the letter that you are receiving from your lender. So you'll hear all the time from your realtor basically that you have to have a pre-qualification letter or a pre-approval letter when you're out there and trying to start looking at homes, all right? So understand exactly what that means though from your specific lender. So these two, pre-qualification versus pre-approval, kind of get bounced around a lot. The general gist is this though. Pre-qualification letter is meaning that they pulled your credit and your credit score meets the minimum credit requirements, and they've also talked to you in regards to what your income is, okay? And then they've determined at that point what you could potentially qualify for. The second one is the pre-approval, which is typically more important because they're actually going to review documents. So you may send in pay stubs, W-2s, you may need tax returns if you're self-employed, but you'll send in the documentation that they need to make sure they verified your income, put that information in, and then told you exactly what you're pre-approved for. Now again, these terms though will mean different things to different lenders, so make sure you read your pre-qualification or your letter from your lender specifically and see exactly what it says, because the more detailed it is, the better chance your offer is going to get accepted. Number three, knowing the difference of what you can afford versus what you qualify for. So a lender is going to tell you that you may be approved for X amount of dollars, which is all fantastic, but what you really need to know is on a monthly payment, what can you afford? So if you're currently paying rent for $1,200 a month and you're approved for a $300,000 loan that may carry a payment of $2,000, is that comfortable for you on a monthly budget? May or may not be the case. So just make sure you're getting detailed information on, okay, you're qualified for $300,000 and your payment's gonna be this amount. Is that what you're comfortable for? If not, make sure you're getting with your lender and saying, well, I'm comfortable affording this as my monthly payment. What is that going to equate in regards to the sales price? Number four, funds needed to close versus your down payment amount. Unfortunately, for some reason, I feel like in our industry, a lot of times clients are going to hear the amount of money needed for their down payment, but not specifically how much money they're going to need to close. So there's typically three aspects in regards to funds to close. Down payment, obviously. Then there's also going to be closing costs, which the seller may or may not be paying some of. And then there's also your prepaid items, which include taxes and insurance and daily interest there before your first payment's made. So make sure you are getting clear, definitive information in regards to what the down payment amount is going to be, and then also how much are you expected to come to full closing with, including all the closing costs and prepaid items as well. That'll also help you negotiate your contract with the right amount of seller paid closing costs. All right, number five basically goes along the same premises of number three and four. Consult your lender before submitting an offer. I've seen this a lot of times, unfortunately, where you'll get excited about a home and really want to get your offer in as quickly as possible, but don't actually understand the numbers of what that's going to equate to when you actually go under contract. So make sure before you actually submit that offer with the real estate agent that you're going to contact your lender and say, okay, here's the offer that I'm making on such and such property with this sales price. Can you tell me what the estimated payment's going to be and how much money I'm going to need for closing? One of the things the lender should ask you is, well, great, how much are you looking at asking the seller to pay toward closing costs? That way they can run those numbers as specific as possible. They can look up the taxes for you, give you a fairly estimated payment that should be pretty accurate depending upon what your homeowner's insurance is going to be. And then at the same time, give you a very solid figure in regards to, okay, here's going to be the total closing costs, prepaid items, and the down payment amount that you need. And then so if you get the seller to pay this amount, then this is how much money you'll need to close. That way you'll be able to negotiate both the sales price and the seller pay closing costs correctly. Number 6. This is not one that I honestly see often now, but it's in regards to not getting a home inspection. This is going to be one of the biggest purchases of your life and probably the biggest one to date that you are about to make. And a home inspection is super important to make sure you know exactly what you're about to be purchasing and what deferred maintenance that you may be looking into here in the near-term future. So make sure you get a home inspection that details exactly what may be wrong with the property now, but also what may be coming your way in the short term. Number 7, opening any type of new credit through this process. So at the beginning, you were pre-qualified or pre-approved for a certain amount of money, and adding any type of new debt may affect what you are qualified for. So if you are very topped out in regards to what you could qualify for and what the offer that you put on the sales price, buying that new car with a $500 payment may significantly impact how much you are approved for at that point and may make you unqualified now for the contract that you are currently in. So make sure that you consult your lender with any type of change in regards to your credit to make sure you don't run into any surprises before closing. Number 8. Moving money around during this process without consulting your lender. So one of the things we as lenders have to do is verify the funds for closing. So depending on where this money is coming from, they may be valid sources of down payment and closing costs. So just make sure you run any ideas by your lender and make sure that you're not going to run into any issues. Because it can be a very frustrating process once you start consolidating money that we have to verify where those sources come from. So you may be providing us a lot of additional information right before closing because you moved money from an account we did not know about. So just make sure you are very detailed with your lender in regards to exactly where this money is going to come from, and that way they can provide you the path of least resistance to getting you to the closing table. Number 9. So this kind of goes along with the assets as well, is depleting all of your money to be able to get you into the home. So unfortunately, this does happen more often than I think it really should, where you're coming up with the total amount of money needed for closing and just kind of scraping by. You want to make sure that you have a little bit of a cushion in there because there are going to be moving expenses that you run into. There are going to be new furniture that you need in the new house. So just make sure you are leaving yourself enough cushion to be able to easily get by the first several months of your payments and also be able to furnish the house how you see fit. Number 10. And it's probably going to be obvious at this point what the last one is, but it's don't be afraid to ask any questions. If you are unfamiliar or uncomfortable with absolutely anything, do not be hesitant or afraid to ask any questions to your realtor, to your lender, to the closing attorney. Make sure you are fully aware of what you are about to get into and make sure that you are comfortable with the whole entire process. This will give you peace of mind and just allow you to know exactly what you're walking in through step by step. So if you ever feel hesitant to ask a question, just push that aside and make sure you ask it as clear as you possibly can in that moment. Well, I hope you enjoyed this video. Again, my name is Travis Wilson with PRMG. Hope you're able to pick up some insight in making your next home purchase a little bit smoother. If you have any questions, feel free to comment below and I'll get right to them.